Hi everybody, this is Murugan. Happy to present another interesting video. Through this video, I can make you to understand what exactly the FIIs are buying and selling in derivative markets. It's going to be part 2 video on FII Open Interest Analysis. If you look at our previous video, we have given you some clarity on how to read this open interest data on a segment-wise classification. Although the data table looks complex, we have given you a step-by-step process for you to read the data. In fact, beforehand, we've made you to understand how this data itself gets documented with a lot of examples. So if you are very new to our channel, this is the first time if you're looking at open interest analysis, I request you to search our previous video, which is again in the heading of FII Open Interest Analysis. So you have to watch that video first, and we have a lot of homework being given on that video. And by doing that, you may be prepared to watch this particular video. So through this particular video, if you ask me, I will be connecting the table 1 with other 3 more tables. And I may also give you some quiz, which can be through a mock session along with some actual data quiz. Let me quickly get into the topic. Before I actually take the actual data, I've decided to first explain the table once so that you get to know what table should be considered and what should be ignored. If you look at this particular table with our previous understanding, you should be in the position to say, I think your observation may be that clients are good in creating long positions and FIs are actually creating, if you put it this way, FIs are actually aggressive in short positions. So just by looking at this just by looking at this two data, if I ask someone to say, they are pretty sure that the clients are actually retail people like you and me are pretty bullish in the market, and the clients are actually pretty bearish in the market. But if you look at this particular video, this expectation is different. Now, what exactly, Murugan, are you trying to convey here? Look at this particular one. What I'm surprised to see in this particular table is, in case if there is any increases in open interest in any of the contracts today, it is ideally because of clients who is actually creating their long positions, and simultaneously it was actually shorted by FII. So if any increases in open interest, so by any chance, if someone says there is an increases in open interest, then someone should be buying and someone should be selling. But we see the clients are actually buying and the institutions are actually selling. So the retail people are buying and the institutions are selling. So if you ask me what is my observation 1, my observation 1 is clients are actually creating their long positions and FIs are actually creating short positions. That is my first observation. And number 2, I have FIs are actually exiting their long positions and clients are actually, not client, it is domestic institutions are exiting their short positions. If you ask me, the accuracy level is close to good because I don't see anybody decreasing the open interest except the FII. So if you ask me what I'm going to do, it is a stock futures, right? So what I do is, in activity, I go to stock futures of this particular date. I see which are the stock futures are actually got a good increases in open interest. Which one got good increases in open interest? So if you look at my activity, increases in open interest among stock futures, then I will consider those things are purchased by clients and shorted by FII. So I'm not actually telling that these stocks have to go down just because FIIs have shorted it. But this is the data reveals me that there are some stocks being shorted by FII. So it may be in connection with tomorrow's observation and day after tomorrow's observation, in connection with my previous observation. It gives me a good clarity that what should be done with respect to that particular stock. So I can actually connect this with my actual data as I move forward. Let me take the next step. If you look at this particular data, what is my observation? If you look at this particular one, it is pretty confusing because if any decreases in open interest, it is very clear that the retail people are reducing long position. So if I see lot of contracts, what is this? It is index call option. Do you know what I do? I go and check all the index call options which are actually increased in open interest and which are decreased in open interest. By any chance, if anybody decreases in open interest, I'm talking about call options, with any contracts which witnessed a significant drop in open interest, then I look at that particular contract. I rather say this was actually shorted by FII. Now they are putting it. So what I see is, by any chance, if I get to know it is a 12,100 call option, witnessed a significant drop in open interest, then I consider that this was sometime back aggressively written by FII, but for some reason now they are exiting this. It means they are not trying to hold this position till the last minute. They are trying to exit. It means probably the market can have a scope to go even beyond 12,100, because this was the call options which was shorted by FII till date, but for some reason they have started exiting it. But this has to be connected with few more days to actually get a good confirmations and accuracy level. But using this particular data, then I have to go and connect it. So if you ask me what is my observation, I can actually say the decreases in open interest, decreases in open interest is due to FII exiting their short position and clients exiting their long positions. It means the clients are no more happy to hold that particular premium. For some reason they are exiting it. Okay, Murugan, if at all, if increases in open interest, is it because of FII? No, I have now a doubt. Is it because of FII? Is it because of Pro? Is it because of DII? That it is not very clear, because all have actually increased open interest. So by any chance, if any contract which gained open interest, any contracts which have gained open interest, now I may have a doubt. Is it the FII have purchased it? Is it the DII have purchased it, or Pros have purchased it? So it is a pretty confusing one. I think look at this particular data. When compared to table 1, I can say that table 2 is very clean, because it is not always we get a table 2 kind of data, but sometime market will also give us a data like table 2, because that is the day alone I use this and then I pass my opinion. Because at table 1, although it gives some clarity on decreases in open interest, but it is not telling me that who may be the reason why that the long position been increased, because it can be FII, DII, Pro. But look at this particular one. Any increases in open interest, this is not certainly by DII or Pro, it is only because of FII. So I can confidently say, because nobody else on the segment wise have increased the open interest. So if at all, if there is increases in open interest, it is only by FII. So if I look at index call, if the data is like this, in case, now I've just taken assumption, in case if the data is like this, then it tells me I will go and check any increases in open interest among index call options. By any chance, if I get to know that 12,000 call option is one of the highest gainer of open interest in the given day, then I consider, if it is the highest gainer of open interest, then I consider that is being aggressively bought by FII. So, Murugan, what exactly the purpose of talking about this 2 table? I'm telling you, this table is also telling me that FIs have increased open interest. Meanwhile, DA has also increased open interest and Pro has also increased in open interest. So it is a bit dicey to conclude which one is reliable. But if you look at this particular one, nobody has increased the open interest except FII. So when I see a data like this on any given day, I may consider that day as very precious for me to document myself. But this is the day I don't confidently conclude anything on long positions. But of course, the client exit and short covering by FII comes with pretty much a confidence. So now you people have to write a summary by looking at table 2. What I have to do is, any increases in open interest is because of FII. That's my first observation. Number 2, and any decreases in open interest is because exit of short of FII and exit of long by this one. So any decreases in open interest, I consider that as a short covering by FII, and any increases in open interest, I consider that as FII long positions. So I think that will actually help me. So if you ask me what is my activity on that particular day, let's say if the data is like this, my activity is to look for decreases in open interest alone, decreases in open interest on index call option. Murugan, how come you got index call option? Because this is a data pertaining to index call option. Why I'm looking at only decreases? Because that alone makes sense by looking at part 1. But if I'm looking at data table like this, then my activity is to look at increases in OA and decreases in OA. Both the data I will, because both are reliable. Because if at all, if there is increases, it is because of FII. And if at all, if there is any decreases, it is because of client or FII in terms of long and short. So both conveys the same thing to me. So I think this, if you look at me, table 1 and table 2, I'm very happy to see if I see a data like this. Such data do exist sometime for us to make use of it. So let me actually go to the next slide. I think now, again, by looking at table 3, I want you people to think for a minute and share your observation. Because if you look at this, any increases in open interest, if you say it is because FII have increased the open interest and it is because FIIs have created long position, meanwhile FI has also created a short position. So if I see any contracts which gained open interest, I am now living with a dilemma. Is it long by FI or short by FI? So it is very difficult to segregate that this is the contract being long by FI or short by FI. But look at this one. Meanwhile, any decreases in open interest, we don't know, is it exit of long positions or short positions by the client. This is the table. It is of no use if I get it in some day. So whenever I get data like this, I have no activity on index future. That's how I generally conclude my activity with respect to it. So just by looking at this, don't conclude the FI have purchased more than what they've sold. So don't conclude that FIs are net long in the position and go and create it. It is very difficult to conclude in that way context. But by any chance, if I get a data like this, it is something which should make use of it and try to conclude it. Because I think now I hope you got a clarity that any increases in open interest is primarily due to FII. So I think if I see like this, my observation is like this. I'm actually sharing my observation here now. I am quickly see any increases in open interest is because of FII. That's my observation. I hope you got my observation that any increases in open interest, because I don't say anybody increase the open interest. If at all, if there is any increases in open interest, it is because of FII long and client short. So what I'm going to do, I am going to look at the index futures today with respect to the expiry date. I see which particular contract have increased the open interest. Sometimes, surprisingly, next month contract might have got a good increases in open interest. It means I agree that FIs are pretty bullish on next month contract. FIs are maybe pretty bullish. But I think at this moment it is hypothetical. But have some patience, because going forward I can tell you how do I connect this particular data using the actual data in terms of contract wise as well. But as of now, if you ask me what is my observation, any increases in open interest in any of the contracts is primarily because FIs were long in that, maybe clients are short in that. And surprisingly, any decreases in open interest is because FIs are actually reducing their positions, especially their short positions. I think any decreases, let's say if I see a bank nifty futures having a big drop in open interest, then I say FIs were so short in that, but now for some reason they're exiting it. So sometime towards the expiry, something happened. Or sometime, maybe about a 5-6 days ahead of expiry, we see something happen. That gives a better idea about how the market going to pan out for next month. And it tells me where exactly the FIs, what may be the price points where FIs are actually interested in buying and selling. So if you start monitoring this particular table on a day-to-day basis, you get a lot more clarity. I hope you got reasonable understanding by looking at these 3 tables. So it is one more table what I'm going to share my observation. Then next table onwards, you get a quiz for you to attempt it. Look at this table. Let me straight to the point. By looking at this table, I can say that clients are aggressively short in market. How do I say? Because increases in open interest at long, short side and decreases in open interest in long side. So they are exiting their long. I can say they are exiting long and increasing short. So they are very selling. That's point number one. Point number two, the FIs are actually bullish in the market. How do I say they are bullish in the market? Because I see they are increasing their long positions and they are decreasing their short positions. This is what we have learned in our previous video itself. If you're not able to understand even this particular concept, it is time for you to go back to our part 1 video and see it and come again here. I think by looking at this particular long, short, client and FII, to an extent you can connect it. Then what is the learning in this particular video? Any increases in open interest in any of the contracts, maybe it is primarily due to FII, because by looking at this table, I can confidently say nobody have increased the long position except FII. So let's say if this is a data relevant today, okay, then I confidently say today FII is very bullish. That is the reason why they've created a lot of long positions. So any increases in open interest in any of the contracts, input options. So now do you know what I do? I see FI have created a long positions. So my activity today is I go and check the index put options. Okay, I go and check with index put options with increases in open interest. Then I conclude that particular contracts. It can be 11,500 contract or 11,700 contract. It can be a bank nifty contract with some specific strike price with expiry date. All these data are pretty much available. I can actually make you people to how to get it. But at this moment, your activity is to search for index put with increases in open interest, because if that is a put got significant increases in open interest, then I conclude that it has been bought by FII. So by any chance, if I get to know that 11,500 put options been aggressively gained open interest, then I may conclude that FII has got some reason to buy that particular option. So market may have a scope accordingly. And do you know who is actually shorting it? It is the client who are actually writing this. Surprisingly, it is not always client buy options. Sometimes clients do short option. That is what this particular data tells me. It may be actual or hypothetical data, but the purpose of this particular video is to give you some educational experience. So that is the reason why we are just connecting it. I can take you through actual data in about another 5 or 10 minutes. So if you ask me what is my activity, I search for index put options with increases in open interest. Then I conclude those things are purchased by FII and shorted by clients. Because if by any chance, if that particular strike price is taken out, then a lot more short covering is expected from the client perspective. And meanwhile, my second activity is again I go for index put options. I see which are the things are actually reduction in open interest. Because so far FIs were short in that, but now they are not short, because it is true that the options are generally been written by institutions. I agree, but it is not always. But sometimes when they find some doubt on that particular strike price, they do exit. Sometimes it gets caught for you and me by looking at this particular data. So by looking at today's data, it is pretty clear FIs are no more comfortable with their short positions in put options. So any big drop in open interest is because FIs were started exiting their short positions in put options. Sometimes, what happens, maybe a deep out of the money put options or at the money put options may be shorted by FIs, started decreasing their open interest. Then I get to know that it may now have a scope for the price to go below, because I'm talking about put options. Before I proceed further, I give you a practice quiz, which is 1. So, sir, I request you people, whomsoever write your comments, make sure that you mention something called quiz 1. Because under the quiz 1, if you answer, it becomes easy for other people to comment, or we can also comment accordingly. So we request you to share your observation on quiz 1 by looking at this particular table. So make sure that you write, when it comes to quiz 1, it is index futures. So if you ask me, I'll say it is index futures. Then what is my observation? So what is your observation? So you see some negative here, and there is negative here, there is positive here, so they are positive. So I'll give you a clue. I want you people to tell me what exactly happened with client with respect to the long position and short positions. And you have to tell me what exactly happened with the DII, and you have to tell me what exactly happened with FII. And I also request you people to share your activity. I think if you are not clear what to share in the activity, let me give you a rough idea. Are you interested in looking at index futures or not? Because this is the table gives me some clue. Let me share answer for this. This is the table gives me a clue that any decreases in open interest is nothing but client who is exiting their long positions. Maybe institutions like domestic institutions are exiting short positions. So yes, I'm interested in my activities to go to index futures. I see what are the big decreases in open interest. Then I connect that. So I want you people to share it. If you're not able to fill the activity, you can actually go and see how I was filling all these things in my sometime back. I was writing in all the slides. So I request you people to have some patience in answering your quiz 1. And now you have a quiz 2. See, in quiz 2, you have a client, a 30,000 contracts in long and short 24,000 contracts. FI again creating a long position, short positions. So you may have option like this. What is your observation? So you have to write it. Sometimes the activity is something not to do anything, because some table, as I told you in my, in this table, this is a table which is pretty difficult, but this is a table which is pretty easy. Likewise, I'm asking you, in case if you see this particular table is easy, if you got anything to do, then you tell me. I will be doing this activity on quiz 2. So I think you got a good idea in terms of how to look at this particular one. Okay, now quiz 3 is pretty interesting, boss. You got table 1, table A and table B. So I request you people to share your quiz 3. So what you have to do is under comment section, you say it is quiz 3. Okay. And table A, what is your observation? And then table B, what is your observation? And which particular table you're going to use it further. So I'm asking you, which table become easy for you people? No, that is what you people have to write in the comment section. Most importantly, because there is a big difference. I can say it is in fact a kind of advanced quiz, because when compared to table A, table B, I can say reveal lot more things, but you have to justify how in that particular comment section, because that tells us that you are deep understanding in terms of it. Otherwise, you can look at other people comments in terms of how they are actually answering to the quiz 3. But I request again all the people to make sure that your answer should be accompanied with what particular quiz you are actually attempting it. So whatever we have seen so far, it is more about the hypothetical data. But now, as I committed in my previous video and this video, let me do exercise in terms of how I use this data on a day-to-day basis to understand what exactly the FIs are buying and selling. But now I may ask you people to do some advanced level quiz by taking actual data. And I request you people to do this activity on a day-to-day basis by looking at the latest data and share your views in the comment section. Do this on 1, 2, 3, 4, 5 days. And probably you can continue this for a month of time. Then you get a good grip that what exactly the FIs are back-to-back buying and what exactly the FIs are back-to-back selling. Because it is not one day data reveals this. But what we are doing by doing it one day, we are trying to understand it. Let me actually now do the actual data. For that, as I said, you people have to go to our website. And last video, we got a lot of comments, people asking that, Murugan, is that data is right or wrong? Because a lot of people got confused with respect to FII Open Interest data with respect to NSE, which is available. So I can even explain why that is actually different and why the data, what is mentioned in the website is right. You have to go to EQSIS.com. So if you go to our website, I think you people can see there is something called EQSIS. And I hope you guys got the menus like home, training, mentoring, training, and finally you got something called analysis. I'm right. If you go to analysis section here, so you see this particular, a derivative analysis where we have something called FI activity index derivatives and FI activity is called stock derivatives. Let me take one by one. Okay. Now let me actually give an attempt with respect to FII activity in index derivatives. Okay. As I said sometime back, you have to filter this to a latest day. For a practice, you can look at any of the day, but I request you people to look at the latest day. And then you actually do analysis for now, which is a part of your advanced quiz. By mentioning the date and the segment, then you have to share your views by looking at the data. A lot of people ask me about, Murugan, how come this 3,401 is coming, But if I look at the FII data in NSE open interest, it is pretty different. In fact, all are positive. Let me tell you one thing. NSE shows the open interest data, but it is not showing you the change in open interest data. So it is a very simple exercise what we do in-house, that we are subtracting the latest data from the yesterday data so that we get to know the changes in open interest. And we make sure that it is presented well so that you guys can easily connect and take it forward. So if you really still wanted to go and take data from NSE, you can still do that and make sure that you understand the data and properly do the calculation, use it. If not, you guys can actually take it from here. Next 5 minutes, let me actually do my exercise and share my views. So do you know what I'll be doing it now? So I'll probably, share my views here. If you look at this particular data, what is my views? Any decreases in open interest is actually because client may be exiting their short positions. So if you look at index futures, the clients were so aggressive in exiting their short positions because pros had not reduced their short position significantly, whereas FIs were interested in adding short positions, and DAs was also adding long positions. So if you ask me what is my first observation, clients were exiting long as well as short, but they're very aggressive in exiting their short position. But it is very difficult to go and check from the contract level because there are so many decreases in open interest. So if you ask me this particular table, I simply ignore because, and probably let's look at the increases in open interest. I think if any increases in open interest, it is actually because FIs are the one who's adding their short position. So if what I do is, now I go and check the increases in open interest. So what is my activity? Activity by looking at 20th November 2019 data on index futures, I have to go and check the index futures which have increased in open interest. So I've just clicked on increased in open interest, then I've taken the 20th November. So I may consider that this has been slightly shorted by FII. So Nifty December contract, look at the expiry date. Nifty December contract is being shorted by FII. That is what my understanding by looking at this particular data. So let me actually do my next day analysis, which is the same day analysis on index call option. So if I go to index call option on, okay, now this is pretty interesting. I think this data tells me some more informations because any decreases on 20th November, with respect to index call options, any decreases in open interest is actually because of FII. It is pro who is exiting their long positions. Meanwhile, FII is the one who is exiting their short positions. So I am now interested in knowing what exactly happened on index call option. So the index call option data is available at the third one. So I hope in my last video, I was telling you people to be hyper focused on this one. But if you have seen this video properly, you can now naturally go to the third table because now this is about index call option on 20th November. Any decreases in open interest on index call is actually because pros are exiting their long position. That is not a big deal. But the FIs are exiting their short position. It means some call options, FI thought the price will not cross, but now they have started exiting their call option. So now I go and see the decreases in open interest. Look at this. I've clicked on decreases in open interest. Then I go and take my 20th November. Then do you know, this is the call option witnessed a significant drop in open interest. I think this talks about the weekly expiry. I think, this tells me on 21st November expiry, 31 2000, call option, the bank Nifty call option or Nifty call options are not being that happy for FIs to create a short. For some reason, they started exiting this particular positions. I think this may be a kind of, in the money options. Maybe this is close to in the money options. And Nifty, this 11,900 options, maybe again for in the money options. For some reason, they started exiting it because we see a big drop in open interest. So we have to connect like this. Let me take 19th data of this. 19th data tells me nothing much. So likewise, you people have to connect with respect to index put options on 20. Look at this one. When it comes to put options, everybody is actually increasing their open interest. So it is very difficult for me to connect the increases in open interest. Is it because of FII long or FII short? So I don't actually go to put option. If you look at my activity on index put option is almost nothing, because any increases in open interest is not necessarily because of FII creating a long or short. So this is the data is not revealing me much. Let me do this with respect to stock derivatives. So if I go to a stock derivatives, again, I go and take my 20th data. Look at this particular one. FIs are creating long as well as short position. So any increases in open interest is very difficult to say that FI has been long or FI is being short. So if you ask me my observation, FIs are long as well as short, and clients are exiting their long positions. But it is very difficult to do any further activity. So if you ask my activity on this day, almost nothing. But if you look at stock call option, by taking 20th of November, almost anything you see is actually increases in open interest, not conveying me much. So if I look at put options, everything is, so I think everybody is actually adding their long positions, not with the significant data. I think most active player is a client. I'm not getting much clue by looking at these stock segments. So I think you, for good practice, you guys can actually go and do previous date. Okay, now let me share something which is very interesting. Pay attention here. By 19th November 2019, when it comes to stock call options, I mean, it is not index segment, it is a stock segment, call options, everybody were busy in increasing their open interest. But if you look at FII, they are the only party who have decreased in open interest, and surprisingly on the short side. So what exactly it tells me? Some stock call options, FIs were actually aggressive in short, but now they are started exiting it. So it means it is a call option. Now I don't go to the table 2 because it is a call option. I go to call option here. Then I go and check my activity is like this. Decreases in open interest. So what I do is I go and check 19th data, because this is actually 19th data. So on 19th, decreases in open interest is actually because of Reliance, Idea and Reliance of November contract, and strike prices 1505 and 1480. These things are reduction in open interest. So if you ask me what is my observation on 19th November, I hope you might now understand the whole purpose of this video. I can confidently say that the FII who were actually short in Reliance 1500 call option, for some reason they have started exiting it. It means, see, as a people like you and me, when we create a short position, if a price starts moving upside, we hope for the price to come down. But this is the time we can confidently say that FIs have started exiting their short positions on 1500 options. It means I suspect that the Reliance can slightly even hedge above 1500. That is what the 19th November data tells me. If you got any doubt, you can still share your things in the comment section. So what I have to do today, my homework is I go to YouTube, just go to our, a channel. So what you people have to do is take that particular video and you click onto that particular video and scroll down. I'll tell you what you people have to write in the comments. So you have to clearly say, by looking at stock future, do you got any spot or not? By looking at call options, yes, I got a spot on 19th November. And I got a spot on anything on, I think I'm not getting anything on put option. On 19th November, in call options alone, there is a clear clue, because everybody is increases in open interest. So you should share like this in the comment section. So Murugan, why should I comment it here? See, we are trying to take some collective participation. So one day you may not comment, other people will comment. But if you do this exercise on a routine basis, it becomes a habit. What you people have to do is go to index derivatives first. So if I go to index derivative, I look at the latest data and I see the screen. So if I got any observation, I have to write it down in my paper. Then I have to look at my index call option. Then I take my latest data. Then I look at my thoughts, because FIs are actually exiting their short positions and client are not a client, pro is actually. So whatever observation. And if you got any activity by looking at that particular data, you can actually take the activity. By looking at this table, I have no activity. So likewise, I have to go to stock derivatives. So in stock derivative, again, do it for latest day. So you don't have to do once in a weekend for all the data. Rather, you do this taking 10 minutes or 15 minutes on a day-to-day basis. Maybe first day interesting, second day very interesting, third day becomes even more interesting, and fourth day it becomes boring, and sixth day you give up. Don't do that. Just do it for a month of time. Be stubborn about doing it. If you're so passionate about doing analysis, probably a month after you get to know that some stocks are being very favored by FI, some strike price being bought by FIs, or some strike price being sold by FIs. Accordingly, we expect that we can actually even connect this with the price. We can even connect this with option chain to understand a lot more information. Hope you got some idea in terms of how to understand it. So do share this video. Otherwise, it is very difficult for us to reach the next person. YouTube may not know that this is a video may be interesting, but if you start sharing the video, then probably the next person may get to know, and their questions will also let us know what to develop upcoming, so that something which sensibly can be developed for you people. Thanks for all your appreciation and patience to watch this video till this minute.